Wow, what a great week it was. The QQQ and the SPY absolutely exploded this week. On Monday and Tuesday, the QQQ moved specifically on Tuesday from 700 to 724 just in one day. Today I'm going to be looking at the charts. I'm going to be analyzing how I got in to take advantage of this momentum, where I exited, and my risk management for the week before key events like the NFP. Hi guys, welcome to my YouTube channel Methodical A1. We'll be looking at the charts, mainly the QQQ and the SPY today. And just a reminder, this is for educational content only. I am not a financial advisor. Do your own research and always remember that the stock market is risky. So let's get right straight into the charts. Here on the screen, we have the QQQ daily chart. So specifically last week, on the weekly recap last week, if you haven't seen the video, just check on my channel. You have the weekly recap for last week. We closed last week on the QQQ right here on the 31st of July. Now, we said if we see a break out of the 13 EMA or a close above the 13 EMA, it will signal some momentum. So what happened on Monday was that we closed right at this point. Market closed on Monday at 700. The QQQ was 700. It was quite a good move from around 688, 690 to 700. And right at the close, we saw the stochastic at 46.5 for the K, while the D was 29.74. So at that point, we had a separation of around 17. So it signals some momentum coming into the market. So we took an entry on Monday, and on Tuesday, just look at this candle. We had the gap up and the move from the open at 708 to almost 724 at 723.85. Yeah, but intraday it went up to 725, as we can see on the highs. So it was such a good move, and we're able to book in some profits at that point because it was quite explosive. I think the QQQ on that day was almost 3.5%, which rarely happens in a day without any significant news, although there were some news about de-escalation, but not in news about a deal actually being signed. There were some rumors, but not actual confirmation. But we took that trade on Monday, and it was such a good move up to 724. And then we can see here at on Wednesday we had a bit of a drawdown from the open at 726 to 717, and then here we had um, the NFP coming in. I think that was on Thursday or Friday, one of those days, but it was reasonable to take out some risk just before the NFP. It's always good to reduce position sizing before the NFP. So the NFP was actually on Friday, as we see here on this Friday candle. That was when the NFP results came in. It was quite good for the market, but not good for the job market, basically. Anyways, you can see it was quite a choppy action on Friday. The market just moved sideways on Friday, but this was the main move from Monday to Tuesday. If you had gotten in on Friday, it would have been better, but we didn't get the confirmation above the 13 EMA. Remember, on this channel, Methodical A1, our job is not to predict the market. Our job is to react to market price action. You cannot predict the market. No one can predict the market and say 100% this is what is going to happen in the next day or in the next 4 hours. You can only react to the market price action based on the charts. That's why we always take our time every week to carefully analyze the charts. So that's that for the QQQ. It was quite a good move. What we would want to see for the bulls is a continuation of this move, and if the 13 EMA starts breaking out higher, you can then see the QQQ attempt to reclaim all-time highs around 748. But if the market starts pulling back to the 13 EMA and below, it signals a downtrend. So we've sold most of our positions this week, but we just have some runners left, just one or two runners left. But we're going to see what the market holds this week. On Wednesday, we have the CPI, and on Thursday, we have the PPI. Those are huge events for the market. So always remember to size down or stay away from the market when it's approaching the CPI or PPI event. So that's for the QQQ, quite an explosive move. It was really explosive. And so we'll move over to the SPY now to look at the charts. On the SPY daily chart, now this was the one where we said last week it looked way better than the QQQ. We actually took our entry on the week before last. This was Friday 31st July. This was where we took our SPY entry, and you can see K was at 38.87, D was at 26.82 on the stochastic at the bottom. You can see here. So why did we take this entry? We took this entry because the price was above the 13 EMA, and also 13 EMA was above 48. 48 was above the 150, the 100 and the 200 EMA. So it's a clear uptrend. That's always key when we're looking at the market. Are the EMAs entangled? Are they close to each other? Are they clustered? Or is there clear separation? As we can see here, there's clear separation on the EMAs. So that's why we took this entry at around 747 with a strike of around 748, 749-ish. And we rode this move from Monday. We sold some positions, just took partial profits on Monday at 757. And then this was the main one on Tuesday. This was an explosive move from the close on Monday of 757 to the close on Tuesday of 771. So we took most of our profits on Tuesday. That was quite a good move. We made 100% on some of our positions, 150, 200%. And yeah, some positions we made 70%, 80%. But overall, it was a really good week due to this confirmation above the 13 EMA. So we rode that momentum all the way to the overbought region. Now, what we want to see on the QQQ is a continuation with the 13 EMA separating higher. But if we pull back to the 13 EMA and it holds, it might actually be another entry point. But if it breaks the 13 EMA, which is currently around 756 this week, that means we have to be careful. That's signaling a market reversal. So yeah, so that's the plan for this week. Let's see how the market reacts to CPI and PPI, and then we'll go from there. Always remember, risk management is key. Before key events like the CPI and the PPI, it's always good to reduce position size. Or the best thing for most people, and I do that sometimes I just stay fully cash without being in the markets before key events like the CPI, the PPI, FOMC. It's always proven most times to stay in cash. Cash is always a position. Always remember that. And on this channel, like I always say, our job is not to predict the market. Our job is to react to price action. It's not the best thing to do to start predicting what the CPI might be. If you might take a position before the CPI can go both ways. It's a binary event. You never know what the results might be, and you never know, most importantly, how the market would react to this news. So that's that for the video today. I hope you were able to get some nuggets from this video, and I'll see you guys in the next video. look out for the next weekly recap. I would also be posting some educational content in the coming weeks, some back testing, looking at how to get entry into the market and when to confirm momentum, because quite a number of people missed this move on Monday and Tuesday. But it's always good to do some back testing and also make sure that there is no FOMO, because if we had bought or entered into the market on Tuesday or Wednesday, we would have gotten smacked, because the market pulled back, like we can see on Wednesday, from 775 to 769. So you always have to manage your risk, do your own research, and I'll see you guys in the next video. Bye for now. Please like, subscribe to this channel, Methodical A1. I have so many contents coming in, so many educational contents, and looking at the charts in the coming weeks. So please subscribe to this channel, please like this video and share. Yeah, see you next time. Yeah, bye.